Hey, what's going on, everybody? We have three big changes that are impacting the housing market here. We're going to talk about what those are, how they impact the housing market, what exactly is taking place, and how it's going to impact potential home buyers. Number one is that mortgage rates are starting to fall, improving home affordability. And a lot of that has to do with the federal funds rate. The market is pricing in a lower federal funds rate here moving into the future. Up on the screen, this is the Fed Funds Futures from the CME Fed Watch Tool, and the market is pricing in with 100% probability that rates will be lower come the September meeting. In fact, to the tune of 1/4 or 0.5% based on the probabilities here. Now, the market is starting to price this in already. The 10-year Treasury yield, which mortgage rates tend to follow in rather lockstep fashion, has started to go down pretty dramatically from where we were just a few months ago. A few months ago, we were sitting over 4.25%, maybe approaching 4.3%, and at the moment, we're down at about 3.65%. That's bringing the national average with mortgage rates down to about 6.14% for a 30-year fixed rate conventional, and it's putting the government products here, FHA, VA, down into the mid fives. Now, if you take a look at this chart here up on the screen, you can see that over the past year, mortgage rates were substantially higher. 1 year ago, rates were sitting a full 100 basis points higher at about 7.3%, with the 52-week cycle high over 8% before rates started falling. Now, that's a pretty dramatic fall in mortgage rates from where we were just a short while ago. Now, the second major change that we have to discuss is that despite affordability improving and mortgage rates falling, purchase applications are sitting at the lowest level that they've been in nearly 15 years. So you can see this orange line, this is the 30-year fixed rate mortgage. Rates have started to trend down, but then you can see from the peak that we saw in 2021 with regards to purchase applications, we've seen a steady decline in those applications. And now we are sitting at the lowest level that we've been in over a decade. And homebuyers are just simply not getting off of the fence right now and jumping into the market. And this brings pending home sales to about a 7.8% reduction year on year. And you can see this is the lowest level that we've seen here in a few years. Now, let's just take a quick look at just how much affordability is improving with these lower rates. In this example, we take a $400,000 loan with a 30-year fixed rate mortgage at 7.3%. That's where the rates were roughly 1 year ago. You'd have a principal and interest payment at $27.42. Now, conversely, if we look at where rates are roughly today at about 6.15% with the same scenario, the principal and interest payment would be $24.37. That gives us a $305 per month savings. Now, that's a pretty substantial savings, but is it enough to move the needle with new potential home buyers? And the thing is that it may not be, considering where inflation is over the last 12 months. If you take a look at these items and how much they've actually grown, these are a lot of the items that we use on an everyday regular basis. And the cost of these goods and services has gone up dramatically. We're seeing increases in auto insurance, in rent, in housing, in restaurant meals, utilities, earnings, education, medical care, personal care, and the list goes on and on and on. All right, now the big news here in the mortgage industry, the breaking news here, if you will, is that conforming loan limits are increasing. You're going to start to hear about this here all over the news and the media, but Pro TPO, this is a wholesale mortgage lender, just announced today that they are now accepting loans from the broker channel for conventional loans. These are Fannie Mae, Freddie Mac loans up to $802,650. What that basically means there for the potential home buyer is that if they're looking at a single family home, owner occupied, they could essentially buy an $845,000 house and put 5% down, which is about $40,000 to $45,000, and they can get access to the best rates and the best pricing. They will not be considered a jumbo or super conforming loan limit and subject to those more stringent guidelines. So pretty unbelievable stuff here. And in case you were curious as to what the conforming loan limit history looked like, I personally was thinking, I had a moment of reflection today. I was thinking back when I originally got interested in real estate and mortgage lending. And I remember That was in '05. And I remember when the actual conforming loan limits were $359,650, nearly 500 grand lower than where they are today. And you can see here as they sort of slowly ticked up. One thing that I thought was really interesting is that from 2006 to 2016, an entire decade, the conforming loan limit sat at 417,000. And then the preceding decade, 2017 to essentially where we are now, so roughly, what is that, 8 years, 9 years, something like that. Okay, we went from 424,100 all the way up to roughly $802,000. Pretty unbelievable. We stayed stagnant for a year, followed by extreme growth, or at least relatively extreme growth if you ask me. So anyway, that is what's going on here in the marketplace. Those are the three major changes that we are starting to see in the housing market. I don't know that the improved affordability, I don't know whether or not we're going into that seasonal time of year where we're just seeing less purchase activity, or if this is the start of a more concerning trend. One thing that I do know, one positive note, is that these lower mortgage rates can really benefit those that have actually bought over the last 1 to 2 years. So if you have a mortgage rate and you're over 6.5%, you may want to reach out to your mortgage lender and talk about the cost and benefit of refinancing, because there may be an opportunity. If not now, if we continue to see the rates trend like this moving into the future, there could come a period of time here over the next 6 to 12 months where it really makes sense to drop the rate, lower the payment, save yourself some money. And with that, have a wonderful day and a great weekend, and we'll see you on the next video.